Hey guys, welcome back on the channel. Once again with banking on Bitcoin. I'm doing this as a video series just to show the power of DeFi yield farming put together with the most important asset in crypto, which is Bitcoin. Although we are not yielding native Bitcoin or depositing native Bitcoin, have that in mind because all of this that I'm about to show you and I show you in different videos is using the power of DeFi, which is not happening in the Bitcoin native network. So this happens on Ethereum, Ethereum layer 2s, Solana. So whatever tokens we are operating with, they are pegged to Bitcoin's price, but they are not Bitcoin itself. They are a tokenized version, which means there's still smart contract risk. They can depeg. Things can go wrong, okay? So if you are someone wanting to just buy Bitcoin and hold Bitcoin natively, this is not going to be for you, okay? So quick disclaimer about that in case you're completely new to this and you are unaware of how these things work, okay? So for the past day, Bitcoin went up 1.5%. So I had the idea to show you that you can actually yield farm Bitcoin with wide ranges. This is a more long-term approach, but you can also yield farm it with narrow ranges. The easiest way for you to yield farm and bank on Bitcoin with narrow ranges is that you don't follow the market noise. So if Bitcoin drops in price, as it recently did on October the 10th, you do not lock in permanent loss, okay? You let your funds sit because eventually they will bounce back up. So we're looking at weekly candles. Actually, let me turn that to daily so we can see it better. So October the 10th, we had what, 10% price decrease in Bitcoin? So yeah, something like that. 10% went down. If you are yield farming with a very tight range because you want those super high APRs, do not pay attention to the market noise because it's Bitcoin. Worst case scenario, and you go out of range on the downside, you hold Bitcoin. That's basically it. You hold, you wait for it to bounce back up, which it will, I believe. We are still in the bull market, all right? And even if we were in a bear market, what you have to understand is that bear markets won't last forever. The same thing as bull markets. There are cycles to this. Eventually, if you hold, it can take years, yes, but if you will hold, you will see the price going back into range. And then, yeah, you can just sell for a profit, but do not lock in losses with Bitcoin. Anyone that you saw that lost money with Bitcoin, it was either because of they were over leveraged, they were playing with leverage, potentially with trading with perpetuals in perpetuals markets, or they FOMO'd in, they buy at the top at an all-time high, price dropped 10, 20, 30%, which is not unheard of during a bull market, and then they panicked, they sold because they had no conviction. They didn't know what they were holding. They just saw the price going down and they thought, I lost money. Well, they didn't. Actually, they only do lose money when they sell. So have that in mind. If we look at the overall look of the chart for Bitcoin, you can see how you can make or lose money. So if you buy here at the top, for example, this was back in 2021, all-time high set at $65,000 per Bitcoin. Then the price went down. If you bought here and then you sold here, of course you made a loss, right? But if you held and if you were bullish about Bitcoin and you had the conviction, you would have to wait for all of this time. So we're talking about over 2 years, 838 days until Bitcoin goes back to the same price, right? But it eventually came back, okay? So this is not for everyone, all right? So have that in mind, and that's why also I'm doing this series. I believe that in the long run, if you do bet on Bitcoin, if you bank on Bitcoin, you will not lose. Otherwise, I wouldn't have a channel on YouTube talking about crypto and Bitcoin and yield farming, DeFi, all of those things, right? Anyways, let's look at different ranges. So if you want to yield farm with the massive APR, you have to set up very tight ranges like 5%, 10%, maybe even higher than that, or should I say narrower than that, 2%, 3%. That will pay out massively while the price is within range. But volatility, as we can see, it's the name of the game, right? So what you can actually do to bank on Bitcoin is have different liquidity pool deposits, some with tighter ranges, some with wider ranges. The wider ones you play it for the long run, the tighter ones you play it for the short term, focusing on yield, nothing more than that, all right? But let's consider you want to set up a new deposit. What are the perfect ranges? Well, there's no such thing as perfect. I mean, you have to consider the perfect ranges for you will not be perfect for someone else, okay? So have that in mind. You have to understand what you are looking for. But as a general rule, I can tell you, even in a bull market, we can see Bitcoin price going down 30%, more than that. And this is not unheard of. Like, this liquidity pool has been active for years, since 2021. But back here, how much did Bitcoin drop in this very short time? 46%, you see? But then the people who had conviction, once again, it paid out, because the people who bought here on May of 2021, after 172 days, so at around November the 15th of the same year, they were up 120%. And even if you bought here, but you didn't sell and didn't panic, you were still up. You were still up almost 20%. Although it would have been a roller coaster, and this is not for everyone. You have to have conviction, okay? Volatility is where you will bank on Bitcoin. So especially in the bull market, you want to have wide ranges, and wide ranges are just looking at the chart and say, okay, this is a potential volatility that I can face 140%. So you gotta have something like that in order to capitalize when markets go down and go back up, but especially to keep on earning fees while markets go down, because that is where you are buying the dip, or where your liquidity pool will automatically buy the dip for you because it's generating fees. You're earning Bitcoin, you're earning whatever the other asset you have Bitcoin paired with, usually a stable coin, right? These are the most active, the most volume generating pools for Bitcoin. So let's talk about ranges. Like, for example, we had this back in December of 2023. There was this massive rally, 81% on the upside. You don't want to miss these opportunities. It will print, definitely. It will generate you a ton of fees. And although you look at your ranges, and for the most time, you'll be, during these lows, these market lows, you will be generating much lower fees, lower APRs. Maybe you'll have a single digits APR or a double digits APR. Since you have a wide range, of course you will experience smaller APRs when the markets are chopping sideways. But wide ranges are meant to profit on this, to capitalize on these market opportunities when the price just skyrockets. We never know when it's going to run, okay? That is the benefit of playing the long game, and you want to cast your net wide. You want to cast it with a wide range, so that you can, even in a bull market, capitalize on the way down and on the way up. You'll bank a ton of money doing that, okay? If you do not have a lot of capital to start with, because that's the biggest issue with wide ranges, you'll have low APRs, and most people feel, okay, my $20 or my couple $100, they're not making me all that much money. I'm getting 20% APR or something like that. Yesterday on PancakeSwap, I started showing you how to deposit. So let's see how that worked. Okay, so this was the deposit I did yesterday. It was something at around $22. Right now it's a bit up. Price of Bitcoin went up for sure, like we saw in the beginning, and it's already generating 1 cent in fees. Of course, this is nothing, but it's the power of a liquidity pool. And look at this APR. Actually, yesterday the APR was at around 30 to 40%. Today it went down, but in a day where the market will be hot and there's a lot of volume, a lot of trading, I will not be surprised if I see this APR going to triple digits. And $22 generated 1 cent, $2,000 would have generated $1, $20,000, $10. It doesn't seem all that much, but put it against traditional finance. Can you on traditional finance with a 20K deposit get $20 a day or $10 a day? I don't think you can. And in this case, you'll get paid half in Bitcoin, half in USDT. Remember that Bitcoin price will go up. So even if you're getting $5 in Bitcoin and 5 in USDT, next year, or better even 10 years from now, that $5 Bitcoin, how much it will be worth. All right, so that's the mentality I have. But let's go back here on that screener. Let's talk about ranges. So eventually Bitcoin in the bull run, it will go down 30%, for example, like we saw here back in April of this same year, right? So in a matter of 76 days, it went down 31%. So you do need to consider that. And usually that's what I do. In a liquidity pool, I have my downsides at around 30% with Bitcoin. Playing for the long run, and during a bear market, if I open a liquidity pool position, that's what I do. On the upside, I tend to go a bit higher than that, or much higher than that. I tend to go 3 times this. So whatever I put on the downside, I put 3 times on the upside. So we're talking about 90% on the upside. All right, so 90%, that would be at 200K, something like that, okay? It might seem too much, but like I said before, we never know when it's going to run. And right now, if Trump strikes a deal about those tariffs, who knows where this will run? Because look at this resistance here. This resistance point was waiting for some news. The news were bad because there was a lot of FUD because of those tariffs, and there was market manipulation, yeah, but essentially only after those news the market dropped, right? And it dropped 10%, but it did recover from that, okay? So on the downside, I would say 30%, even during bull runs. That is going to help you a lot. On the upside, triple that. Triple what you have on the downside, because after all, we are in a bull market. Later on, entering a bear market, then that is the potential point in time just to squeeze out ranges and set something at around 50%, 60%, 100% if you want to play it safe. 100% overall, right? But if you look at the current price and looking at the chart, I mean, 109, that's the current price. 30% down from that puts us here at 75k. I think that's a solid spot to have our downside range, because we have some support here that went into action twice, and we had previous resistance that later on became support. So I think it's a good support level if you aim to do this right now and deploy your liquidity into a Bitcoin pool right now. 30%, I think it fits perfectly. Then on the upside, if you don't want to go with 90% because you want more yield, you don't want such a low APR, go with 150, and you will see when the price goes up and we have something like this. So let's say 40% price appreciation, your Bitcoin gets sold for USDT. That is the time where you take profit, right? So have also in mind that whenever there are resistance points, then there will be corrections. That's when the markets are hot, and you gotta take the opportunity when it meets resistances in order to take profits and actually sell some Bitcoin, because there will be a correction, okay? And this is where yield farming starts to need for us to have a bit of a trader's mindset. Of course, you don't necessarily have to do this, and you don't have to time the market. What you can actually do is whenever there are these events where the price just drops, you use those stable coins that you get as fees. For example, if you don't want to put fresh money in, use those stable coins to buy the dip and deposit more into the pool, because it's Bitcoin. And like I said in the beginning of the video, in the long run, it always goes up, all right? You also must avoid leverage at all costs, because that can wreck you, and you just use these very reliable DeFi protocols like Uniswap, which is a titan. They are battle tested, okay? Hopefully they keep on being battle tested in the future and never show any issues, but also it is very important to know that there are still levels of risk to this, okay? So guys, to sum it up, you can make the most out of these opportunities by having a 30% range on the downside, and I would say at the very least, double than that, 60% on the upside during a bull run. That would be your wide range position, and then you can have a more narrow position where you're just focused on yield with 10% range overall. And in the days where the market is chopping sideways like today, this has been something that has been ongoing for the past week. So let's go actually with 1 hour candle charts. So you see there's overall a 10% difference in price over the last 12 days. And this ties up perfectly with the video I did yesterday, where you can actually have, instead of one whole chunk of liquidity deployed into a single position, you can have your liquidity deployed through multiple different strategies. And you can have a more narrow strategy focused on pure yield. Because after all, the thing is that Bitcoin works in bear markets, in bull markets. It's a consistent earner. While memes, they will have their periods in time, their seasons where they are very hot and then they go completely cold, okay? You can see that even with the biggest memes, with some things like Pepe, there's massive spikes and then they drop substantially. There's not a lot of volume, there's not a lot of interest, because Bitcoin runs the show. We want to have exposure to that, and you want to capitalize on that, right? So even if you don't have enough capital in order to deploy it through different positions, you can start with a wide one, use the yield from that to then deploy into a more narrow position with increased yield, or vice versa. You can start with a bag of a couple $100 and have a 10% range. If it goes out of range on the downside, wait for it. Worst case scenario, you'll have to wait for a long time, months or years. Best case scenario, it will bounce back up in a couple of days or weeks, then you're back in business, and with that yield you can actually open new positions with wider ranges, and those will be the ones focused on generating your revenue, but on the long run, okay, on the long term. All right guys, this is what I had for you about ranges with Bitcoin. This is just my opinion. Let me know yours in the comments, or if you have any questions. I also have plenty other videos showing you reliable, repeatable platforms that you can use actually to off-ramp all the profits that you get from these liquidity pools or others. So go check those out as well. I'm going to wrap this one up. Thank you for watching. Take care. Keep exploring crypto. I'll see you on the next one.